There are few forces in the financial world as profound as the stock market, a living, breathing system that has the potential to transform ordinary lives. It is where millions of individuals collectively assign value to dreams, innovations, and aspirations. The market is not just a marketplace of numbers or charts. It is a reflection of human confidence, effort, and conviction. Throughout history, the market has been a gateway to opportunity. Small positions taken with intelligence and patience have allowed ordinary investors to witness extraordinary outcomes. Patience and discipline are the twin virtues here, qualities that reward not only those who study trends, but also those who respect the slow and steady accumulation of knowledge and capital. But this power is balanced by risk. The potential for gain cannot be discussed without acknowledging the reality of loss. Smart investors understand this balance. They respect the upside, but remain mindful of the downside. This balance between risk and reward underscores every decision made on Wall Street and beyond. And it is the foundation upon which wealth creation and financial prudence stand. In this story, we will explore companies that operate beneath the radar, penny stocks, and reveal how even modest share prices can represent real business activity and market potential. But first, we must understand the world these companies operate in. Today's global economy is interconnected in ways once unimaginable. Industries span continents, supply chains cross oceans, and investors in the United States can participate in companies whose products affect markets thousands of miles away. Two such industries play significant roles in this era: digital entertainment and financial services. These sectors are not only essential for contemporary lifestyles, but also stand at the forefront of technological and economic change. Worldwide, consumers demand instantaneous access to content. Streaming platforms deliver music, podcasts, and video to every corner of the globe. Urban populations rely on modern financial products to manage retirement funds, generate income, and support infrastructure investment. These industries shape how people work, learn, and engage with the world. Companies within these sectors operate through digital platforms, subscription systems, advertising partnerships, investment vehicles, and strategic alliances. They have footprints that touch major cities and everyday consumers, from media hubs like Los Angeles and New York to emerging markets abroad. Understanding how these industries operate offers crucial context, especially when exploring companies with share prices below 5 that are still building their global presence and relevance. The first company we explore provides a platform that bridges cultural entertainment and digital access. It builds an expansive library of content that includes music, podcasts, and video offerings. Its revenue streams come from advertising, subscription services, partnerships with other media platforms, and licensing deals. Over recent years, this company has shown notable revenue growth, indicating increased user engagement and monetization potential. Its financial updates reflect expansion efforts, with rising subscription numbers and strategic investments in technology and partnerships. However, like many emerging digital ventures, it has faced operational challenges. Expenses linked to content acquisition and infrastructure have kept net profits in negative territory, even as top-line revenue climbs. Stock analysis. In the world of financial products, another entity we examine is structured differently. Instead of operating a digital service platform, this business functions as a closed-end investment fund. Its objective is to generate returns through a diversified portfolio of income-producing securities. These types of funds often aim to deliver consistent distributions to holders of their shares, appealing to investors seeking income streams. Unlike traditional corporations, this entity does not manufacture goods or services directly. Rather, its performance is tied to the income generated by the assets it holds. While both business models differ profoundly, they share one key characteristic. Their shares trade at prices under $5 per share on major U.S. exchanges, placing them in the category commonly referred to as penny stocks. But despite their low price per share, they represent active market participation, real business operations, and distinct opportunities for engagement by investors who conduct thorough research. The first company, the digital entertainment platform mentioned earlier, is Anghami Inc., trading on NASDAQ under the ticker ANGH. This is a music streaming and digital entertainment platform focused on audiences in the Middle East and North Africa. The company delivers hundreds of millions of songs, podcasts, and video content to its users and integrates services across mobile devices and digital ecosystems. Stock analysis. ANGH typically trades at prices under $5 per share, with recent closing values around $3.52, making it a U.S.-listed penny stock with real market price data. Stocks under $1. The second is Nuveen Insured California Premium Income Municipal Fund 2, Inc., known by its ticker NCL. This entity is a closed-end investment company whose objective is to generate income through a portfolio of municipal securities, often with tax-advantaged characteristics for certain investors. It also trades on a major U.S. exchange, with its share price historically appearing below $5, fitting the penny stock category, while offering a very different business structure compared to tech or consumer companies. Stocks under $1. These two names, although distinct in industry and operations, embody how diverse the penny stock landscape can be, from media platforms shaping cultural consumption to structured financial vehicles focused on consistent income. History and growth. Founded in 2012, Angami has aggressively pursued growth within the digital streaming market. It has invested heavily in localized content, strategic licensing, and partnerships with regional telcos and media companies to expand its subscriber base. Stock analysis. Rapid revenue increases year over year as digital usage grew. Stock analysis launch of tailored content libraries for regional audiences, simply Wall Sainty. Strategic collaborations and content licensing agreements that expand market presence. Benzinga. Although revenue has grown, profitability remains elusive due to high content acquisition and operating expenses. Negative net income indicates ongoing investment costs and competitive pressure from global players. Simply Wall Saint. Angami's focus on niche regional content and partnerships provides a differentiated user experience compared to larger global services that may not emphasize local relevance. Nuveen Insured California Premium Income Municipal Fund 2, NCL. Unlike a traditional operating company, NCL is a closed-end fund that invests in fixed income securities, especially municipal bonds. These funds are designed to provide investors with a stream of income via interest payments and potential asset appreciation. Closed-end municipal income funds can attract investor interest, particularly among those seeking income in a market environment with fluctuating interest rates. However, these securities may trade at discounts or premiums relative to their underlying net asset values, influenced by market sentiment and tax considerations. Market volatility, changes in tax policy, and interest rate movements can all impact fund performance and share price, especially for closed-end structures. Short-term share price movements may be tied to broader municipal bond sentiment and liquidity dynamics. Long-term performance depends on the fund's ability to maintain distribution levels and manage portfolio risk. Looking ahead, Angami's growth is intertwined with expanding digital media consumption across emerging markets. If subscriber numbers continue to grow and content costs stabilize, the company could strengthen its financial position. Industry trends around video, audio, and subscription monetization provide fertile ground for expansion, particularly as mobile internet adoption increases. However, profitability remains an ongoing challenge. For NCL and similar closed-end income funds, future performance will be shaped by interest rates and tax policies that influence investor demand for municipal securities. A stable or improving interest environment that supports municipal income returns could attract more interest from income-focused participants in the market. Balanced optimism is essential. Tangible opportunities exist, but they remain tied to both macroeconomic conditions and company-specific dynamics. The journey through the stock market's under $5 tier reveals both promise and complexity. Penny stocks like ANGHH and NCL show that low share price does not equate to a lack of substance. Real businesses and financial entities operate beneath these valuations with tangible revenue, market history, and operational footprints. What matters most is discipline. Knowledge provides clarity where hype creates noise. Markets can reward long-term thinkers who study fundamentals and respect risk. Whether through robust digital platforms or income-producing financial vehicles, the market remains a system that rewards patience, education, and thoughtful analysis. The world of penny stocks is not merely a gamble. It is a landscape that reflects economic diversity, emerging opportunity, and the broad reach of capital markets. Understanding this landscape begins with research and ends with informed decisions. In the end, the most important investment is not the price you pay. It is the